welcome. Today is Tuesday, March 12th, and I want to go through the two trades that we're currently in rig, TransOcean and Wynn, W-Y-N-N. First one is rig. As you can see, the market's kind of rallying today. Took out yesterday's high. Okay, this white horizontal line represents my stop loss, which is below the low of the inside vertical bar of the bar that we got long. Remember, we went long right here. Remember, we went long at 53.43. 53.43, ran up here, came back and filled. Remember, this is our initial stop loss right down in here. And since today was able to take out the last 2 days high, right, 1, 2, okay, I'm going to move this up to below this low now. Okay, so let me show you exactly what I'm doing. Yesterday's low is 52.40. I'm going up to 52.30. 52.30 is my stop, my trailing stop on this. I'm starting to really manage this trade now. 52.30. Remember, we're long at 53.43. We're moving our stop up from 51.81 to 52.30, which means we're only risking $1.13 on this trade. Okay, $1.13 is what we are risking on this trade. Our profit objective is 55.05. Okay, so we're risking a buck 13, and our first objective is 55.05, and again that would yield us what, a buck 72. So that's what we're doing here. So again, we're moving our stop up to right here, right below yesterday's low by 10 cents. Next trade we're going to look at is Wynn Resorts. Again, we got a little run up yesterday to 119.28. 119.28. We're looking. Our first objective was 120.44. Unfortunately, was not able to get to that number. Actually, we retested the high, which was put in place on February 28th. The 119.25. Yesterday went to 119.28. Took it out by 3 pennies only. Came back down. So our stop now, again, remember we raised it up yesterday to below this low of 116.46. So we're taking 1, 2, 3 days below the low of the last 3 days. Okay, and the lowest low in the last 3 days was put in place on March 7th. That low was 116.46. Remember, when trading stocks over 100, I typically use a 20-cent penetration. So 20 cents below 116.46 is 116.26. That's where my stop is, 116.26. Remember, we went long at 117.53. Stop now is 116.26, risking $1.27 on this. First objective is $120.44. Looking to make, and again, that's only our first objective, is $2.75. So this trade now, the Wynn trade, is now a 2-to-1 risk to reward ratio. Rig, we're getting close to about a point, a 1.5 to 1 risk to reward ratio, and that's where we're sitting on these two trades right now. All right, let's look at a couple currency pairs here. This is the U.S. dollar Swiss franc. As you can tell here that the bars turn from red to green right up in here. We've taken out the 200 exponential moving average. What I want to do is I want to measure the fib retracements from this low up to this high. First area in which I would get interested in looking to buy this market would be at the 38.2% retracement right in here. That could be done with a relatively small stop, so we'll look at this number, about 93.48. We've got about 100 pips for the market to continue moving lower, so we're going to look at that in here, and I'll let you know what I'm seeing there. Let's move to the next one. All right, next one we're looking at is the U.S. dollar Canadian dollar. All right, as you can see here, turn from red to green right in here. We've got a nice run up right in here. We've topped out here. The market can pull back into here. Look at how the 50 exponential crossed up through the 200. So you got that golden cross going on there. I want to measure the last swing up. I'm going to measure from this low on the fibs up to this high. That first level, the 38.2, would be right in here. Okay, but you could probably start. I mean, look, sometimes you've got to reverse engineer your trades, and you know you want to be looking to go long on a pullback to a logical support level, right? You need to look at this chart and ask yourself, what is a logical place that you would not in a million years want this trade anymore if you went long anywhere mid to lower or a little lower down to the 38.2. And quite frankly, that would be down in here. That would be actually ISL, again, stands for initial stop loss. It would have to be below the 200 exponential moving average. And you're talking about 200 pips from right here. Okay? So I'm keeping my eye on this. I'm going to wait for a pullback, see if we can get a nice pullback. Of course, these averages will move higher as time progresses. Let's look at one more chart. And let's look at one more currency pair here, the Australian dollar, US dollar. Okay, this is what I'm looking at. I'm going to put on a trade here. Real quick trade. Not a whole lot of risk here, but I'm going to go for it. Okay. Let's take a look at that. Okay, the market took out this low here, right? Here, let me just mark this up, show you kind of what I'm thinking. Market took out this low. Granted, if you look at a weekly chart, you know, the trend is up longer term here. But on a daily chart, we're kind of chopping around. We're definitely in our trading range here. There's no doubt. It could be a holding pattern before we move a lot higher. It could be, right? But this is a daily, and I'm going to try something here, which is a very low risk trade, considering it's a daily chart. Okay, so we took out this low right in here. Now, granted, this bar is a complete, what I like to call a bullish blow-off bar, right? Open and close on the top quarter. Got a big tail here. Big reversal pattern to the upside, and we've done exactly that so far. Okay, but again, this is a probability game. I think we're going to hit some type of resistance up in here. I'm going to do two things. I'm going to measure the fibs just from this downswing here. Okay, look at this. This is what I'm going to do. So we measured from this high down to this low here. Look at the 50%. I'm going to look at the 50. I'm going to go in. I'm going to sell it. Let's see, 1.03. Let's see, 1.0357. See if we can get 1.0357. Okay, we're getting close to that. So I am looking to sell it rather at the 50%, which is slightly above that 200 exponential. This is a 200. This is a 50 exponential. Look at my stop on this one. My stop is going to be at 104.15. Initial stop loss 1.0415. Okay, what am I risking on this? Okay, let's go through this. I'm going to change the stop. So I'm looking to go short. Okay, at 103.57. 103.57. Okay, let me put this up. This is going to be, I'm looking to sell it right there, 103.57. And my initial stop will be right at the 60% retracement. If the market rallies up there and starts to take out that 50 exponential moving average, I don't want it anymore. But I'm willing to take the risk on this trade. Okay. Right there, 104.17. 104.17. So I'm risking 60 pips on this trade. So a new Forex currency play right here. We'll see if we get filled. So we'll revisit this tomorrow, see what happens. Again, this rally up off this low. Looking for some resistance to come into play right here. We got the 50 Fibonacci retracement from high to low, slightly past that 200 exponential moving average, near the top band as well. Stop is placed right above that 50 exponential, a hair past that 60% retracement of the down. Would be looking to make at least twice what we're risking on this trade. And we'll revisit that tomorrow. So we'll see what happens. Have a profitable day. Hope you liked the video. Bye for now.